All kinds of things are going on in our industry, but you know what? The one thing that is certain is things are changing. Barry Horvath, and this is Moving Forward TV with your local market update.
And I am DeLynn Gaston. Thank you so much for joining us. We were just saying, dun, dun, dun. Look, we both have name tags on.
Yeah, go figure.
Ta-da!
In case I forget who I am.
Yeah, I know.
Because nobody in public knows me without my name tag.
So, I've put it on like upside down a couple of times, and then you're like, oh, well, that's because I needed to read it.
Yeah, so you could remember who you were.
But anyway, so hello, everyone. Sorry we missed like a week or so, didn't we?
No.
Well, we ran reruns. Sorry about that.
We're here all the time. Whether you like it or not, we're going to be here.
24/7. Here we are.
You can always count on us showing up for this show and other things. So this week...
So we've had some successful lunch and learn.
Yes, we have.
I think.
Yeah, we've had some really amazing lunch and
We
learns.
really have. And we want to thank you guys for all coming out and joining us for those. And we've been getting some really positive
feedback. Our realtor
feedback.
partners, of course. So
yes.
It's been
We've been getting some great feedback from all of you guys. We're glad you're enjoying it. And keep your feedback coming of things that you'd like to see and like to know, because we all figured out a long time ago that it takes all of us to make a transaction and a deal go smoothly. So the more we can learn, the better and smoother things will go.
Absolutely. So what are we going to talk about this week, DeLynn? There's a lot of things going on about
week. Lots of
credit.
changes.
And everybody wants to know about credit.
Right.
And how do I get
It's been
an
all
approval?
over the news.
Yeah, and it's always...
Some changes coming. So they're starting to threaten us. Well, they are. They're starting to threaten us or scare us a little bit about some changes that are coming this summer. So basically what it is
FICO.
FICO,
Yeah.
which stands for Fair Isaac and Company. So FICO, everybody kind of knows it as my FICO score, people say my FICO.
Is it really fair?
And, the truth of the matter is it's two guys who started this back in the 50s, and the guy's name was Fair and one was Isaac.
Are you serious?
I am.
That's so funny.
So FICO score, believe it or not, has been around since like the late 50s or something, but it didn't come into the mortgage world until 1996.
Wow.
1995, 1996 is when it kind of hit the mortgage world.
And the way the algorithms work are constantly changing, especially in the mortgage industry, because it's so funny, people call and they say, what do I need for a minimum credit score to qualify for a mortgage loan? And, the typical answer is, well, you should have a 620, a 640 is better, but you can go down to a 580. And then they say, well, FHA says I don't need a credit score. Well, good luck trying to find a loan without having at least a 580, because you're going to have to jump through some major hoops if you have a score that low.
Right.
But you know what?
And the thing that the call that I have to re-explain to people what is this. They'll call me and they'll say, well, my credit score is a 695. I just checked it with Credit Karma. Or that's what my Capital One on my app says,
So why is it different with the mortgage industry?
Right.
And it is the algorithms.
It is going to be different. It is going to be different.
And why is it different for a car loan? Why is it different for a credit card?
And this is how I explain to people. It's the algorithms, like we talked about. So the algorithms, which is what each lending institution will submit to the credit bureaus, Equifax, TransUnion, Experian, certain algorithms, certain things, so to speak, that are important to them. So us in the mortgage industry, the most important thing, obviously, is have they been late on mortgage payments or foreclosures or anything like that. A car industry is going to be the main thing for them is going to be, have they ever had a repossession? And obviously,
or can you drive?
Can you drive is probably a good one.
They don't look at that?
I know. You'd think it should be on there.
How many tickets you got?
I know. You'd think it should be on there. But anyway, one day, right? One day it will be. But anyway, so it's really a picture of all kinds of things, but it really depends. A mortgage company, they're pulling your credit and they're lending you $100,000, $200,000 or whatever. Whereas, you might go to J.C. Penney's and apply for a credit card. Well, they're lending you $500. Their criteria is going to be a little bit different than somebody who's lending you $200,000.
Of course, that's unsecured credit. So,
which is more risky.
Yeah. So what I didn't realize was that, when we started doing some research on this, is how FICO's algorithms, as you called it, how they've changed through the years.
Yes.
And it's really, 2009 was a change, a big change. That was FICO 8. And then 2014, FICO 9 came out.
I was going to say, about every 5 years, it seems they change them.
And FICO 9 was more on the trending data.
Right.
And now, what is this one
FICO
called?
10.
Go figure.
We have
So
FICO
it's
10 and FICO 10T coming out.
It's kind of like, you went out and bought this iPhone, and you had the iPhone 2.
Stop, leave me alone.
And it flipped, yeah. I know. And then you get the new, the Pro 11 Max. Now we got all
some of us do. Some of us don't.
Some of us get dead batteries faster than others, too. So, anyway, now that FICO 10 is out, it's a different way that they look at your credit. That's really all that it is.
Right, and it's called trending data. So that's what it is that they're kind of trying to tell us. So it's not like and they say basically that the changes that are coming, and again, it's not coming until the summertime. That's when they're going to institute it in the repositories, but it's not going to take effect right away because not every lending institution or credit card company or mortgage company or car loan company or anything, not everybody is going to jump on board and change their system to FICO 10. They're still going to be on FICO 8. They're still going to be on FICO 9. So there's a chance that you won't see any change at all. They are starting to, it's getting a little scary. I've watched a couple of news articles about this, and it's getting a little scary where they're saying, everyone's score is going to drop over 20 points. They're going to what are you going to do? Your scores. But they say about 110 million people can expect to see their credit scores go down 20 points.
And they're not doing anything different than they're doing today, right now. Their score's just going to drop.
And about 80 million people are going to see their scores go up by about 20.
Yeah, so it's just
points.
how they look at the data. So, So let's explain maybe how they're going to look at what they call trending data.
Okay.
One of the things that I've learned is that if you are somebody that before, if you had $5,000 of credit card debt, you had $5,000 of credit card debt. It affected you one way.
Right.
But now, if you started out, it was the same way. If I started out with $10,000 and I paid it down to $5,000, that's the trending data. So that's going to be
a positive
in
for
your
me.
Way. Even though you
had no debt, let's say I had no debt,
and all of a sudden you took on $5,000 worth of credit, boom, you're going to be hit and penalized for it in your score because now you're showing irresponsibility.
Because mine is going up, up, up.
And I paid it down.
My credit availability is getting smaller.
Even though we have the same amount of consumer debt, it doesn't matter.
It's viewing it differently.
I started with 10, I got it down to 5.
Now there's positive things to say about trending data. In the mortgage world, we've had trending data for several years now. So we've been looking at this and using it because and one of the reasons they came out with this is because there's a lot of people out there, you guys might be some of those people who you pay all of your bills on your credit card to get the points.
Yes.
Right? So your credit card, maybe you have a $10,000 credit limit and every single month you run it up to $8,000 and then you write one check at the end of the month and you pay off the whole $8,000 and then next month you do the same thing. Well, in the old ways, before we had trending data, that would look negative because keep in mind all creditors report on most of the time to the credit bureaus once a month. If they only report once a month, and we go to pull your credit report and you have a $10,000 credit limit and you have an $8,000 credit balance, that looks bad, right? That's going to hurt you on your credit score. And people were saying, but I pay my bills, I pay everything, I'm getting the points on my credit card, I pay the whole thing off at the end of the month, thus trending data. So now we can see on the credit report where, oh yeah, look, they charge it up, they pay it off, they charge it up, they pay it off, they charge it up. The trending data
before you
over the
couldn't
last
see it.
24 months is what it shows us that that's what they've been doing. So now that particular thing does not hurt your credit anymore.
Right, which is going to be a good thing.
However, if
Uh-oh.
you have a late payment,
Yes. If you're late, they're going to hit you.
It's gonna hit
'cause it's-
hard.
And of course, if it's a recent late,
right,
as always, that's going to hit your score more.
right.
Whereas time goes by, you make payments again on time, your score is going to eventually come back up.
So, some of the people that we've been seeing, and the news reports, I think some people are blowing it out of proportion, trying to scare people. I don't,
What are they trying to do?
The bottom,
Tell
I know, the bottom
them,
line is,
go ahead and get something now, so because your score's 20 points
you know,
higher,
I
you might get
know.
a better price.
the bottom line is, nothing's changed as far as what you and I have been telling people and everybody else has been telling people for years and years and years. Pay your stuff on time.
Right.
Don't max out your credit cards, and you'll be fine.
And let's face it, though, everything we do is credit driven today.
Everything.
Your mortgage interest rates that we're talking about are affected by it. Your
Car loan rates, your credit card rates,
your MI
your mortgage insurance, right?
Yeah. Your home insurance rates.
Your home insurance rates,
and
exactly.
now even like health insurance too can be, different ratings on who will underwrite you and take you.
Yeah.
Because it shows if you're a responsible adult, you'll be a healthier. So there's so much.
And you know what? And credit scores aren't going anywhere.
No.
They are here to
This
stay.
is confusing
So
to
you
me,
need
though.
to work on it if your credit is in rough shape.
How does I know it shows you're more responsible if your credit's good, but does that make you a better driver? Really?
I
So
know.
my car insurance rate should be. I'm just throwing it out there.
I know.
Does it really?
I know.
I
That's
mean,
what drives
they
me crazy.
probably the actuaries probably looked at it and did a snapshot of people with good credit versus mediocre credit and said, yeah, they're more responsible. They're more likely. And just because you're married or not married today, does that make you a better driver?
I know.
I mean,
know.
some of my married friends are the worst drivers ever.
Because they're arguing with their spouse.
Yeah, I would think that should be a hit. That should be an adjustment. You should pay a higher rate because you got a loud. I'm just saying. Anyway,
He's off on a little soapbox
little bit.
expedition there.
little bit.
Reining it back into credit.
And-
But the thing is that they say, the credit experts say that this trending data, this new way of looking at it is going to supposedly save creditors something like 17% decline in delinquencies. That's what they're expecting it to do. I guess make better credit decisions so that your deficiency goes down. That's what they say. I'm just reporting the
People who pay
news.
are going to continue to pay. People who don't pay aren't going to pay.
I know.
Yeah. So
But you're right. Everybody needs to just work on their credit. Everybody, it's not going
important.
anywhere. It's important.
Pay
No
your bills
matter-
on time. Don't apply for too much credit, especially
Yeah.
if you're getting in the loan process. Don't go out there and go online and check someone else's rate and give your information because all they're doing is selling your information.
Right. And here's the worst thing you can do is nothing.
Yes.
Whatever you do something.
I agree.
So if you did have bad credit, maybe you had, good things happen to bad people. So something happened to you many years ago or whatever. The worst thing you could do is stick your head in the sand and say, okay, I am paying cash for everything else that I ever buy and I'm never doing credit again. That is the worst thing you can do for yourself. You need to go out and you reestablish and you need to, if you have some debts, maybe pay them. Talk to a credit person. Most of them will do free consultations with you to help guide you anyway. And if you need help in cleaning it up, they do it for nominal fees, So just talk to somebody, but whatever you do, don't do nothing. Do something because
'cause when
you're
you're-
going to have to clean it up.
And it is going to affect you.
It's going to affect
One way
you
or another.
in many aspects of your life.
Anything else we need to talk about in credit and the new FICO 10? We know it's coming out this summer.
Coming out this summer.
Yep, be prepared. Fannie Mae and Freddie Mac will be utilizing this to see if you qualify for a loan or not. So it's important to know about it.
And if you guys have questions, by all means, feel free to reach out to us. We'll, guide you or help you with what we can or guide you to people who can if we
Yep.
can't.
Apply sparingly for credit. That's my advice to you.
Yeah. Because people
apply
always
for
say,
you.
well, it's so old. Should I pay it? Should I not pay it? You know what? Everybody's a little bit different. So I would reach out to either ourselves, like I said, and we'll be happy to guide you, or a credit person, a
Yes,
credit
absolutely.
counselor.
All right, let's talk about other things going on now that,
I know. I'm so excited. So
We got
we have
some
some
new
really
programs.
exciting programs. I am really excited about these.
Not only is your FICO score going to change, but the loan program you are going to be eligible for is going to change too. So
Yes. So I want to talk first about our new down payment assistance program. So we're all kind of tired of the bonds, right?
Well, it's hard because you're dealing with a third party
Yes.
that's not an institutional lender, and we're talking about government down payment programs
Right.
in general, not any one specifically. And you have to meet their criteria and the own lender's criteria.
Right.
That's typically the way it works. So now with our new down payment assistance program, it's all done in-house under
know.
one roof. So to me, this is exciting
It
news.
is. It is.
And
I really like this program as well. And we've done many of the Pasco County down payment assistance programs. They're out of money right now. So
Right.
I think they're doing SHIP funds and things like
And-
that. So there are still a couple of little programs around here and there.
There's some merit to those programs, like the bond. I think the drawback to me on that bond program is that your rate is, it's greatly, even though you're going to get that $7,500
I know.
for free, your first mortgage rate is affected by it. You are paying a
Right.
higher rate than everyone else
Yes.
for getting that money on your entire loan.
Right.
Not
on the whole 150,000 or whatever that you buy.
Yes.
That's why they say you don't have to pay the loan back after 5 years, because in 5 years you've more than paid back that
Yeah.
$7,500.
And a lot of
with the
people don't
higher
understand it.
interest rate.
And if you need to have it, that may be the way to go. But,
Right.
your rate is absolutely affected.
There's definitely a place for that.
So let's talk about this program
Our
we have
program.
in-house that's a little different. So one of the things, to me, the most exciting thing is that it works typically with a down payment. You have to go FHA all the time. And some properties are not FHA eligible. Some people don't, like the MI costs, because if your credit score is better, the MI is higher on FHA than conventional. It's lower if your credit's lower. Funny how we just talked about credit, how it affected that. But this will work on both conventional and FHA. Boom!
I know. So here's kind of how it works, which is really cool. So we have, let's just say we did do an FHA program. 3.5% down payment is FHA typical, but we're going to give you the 3.5%. How cool is that?
Because we're nice guys.
Because we're
And
just that
girls.
cool. Thank you. So, that's nice. So hopefully the people, because a lot of times it's like, okay, down payment and closing cost, do they have both? Sometimes they have one, but not the
Right,
other.
right.
So instead of going and asking the seller to pay closing costs, because sometimes there's just not enough room in there, or, it's a hot market or whatever. So if we can give them the down payment, then they save their money for the closing costs. We don't have to ask the seller for anything. That's a nice deal.
Yes, and credit scores, there are minimum credit scores. So on the
Right.
criteria, 640, again.
Yep.
We want that good credit, so we talked about that earlier. We can go down to 620 in some cases.
Right.
So
And under the FHA program, there's no home buyer education necessary. Whereas with all of the other programs and under the conventional programs, they do require home buyer education, which is never a bad thing. I always recommend
yeah,
it to people
sure,
anyway.
But it's not required.
But
You
it's
don't have
not
to panic.
required if you use the
You
FHA
don't have to panic.
program.
I don't have time to do it. I can't
I
get to
know.
it. I got to close. I got to work. La, la, la.
I know.
All right. The other thing is, if you are an FHA buyer, it's not required you're a first-time home buyer.
Yes, I thought that was a pretty cool thing
Yes.
too.
Now, on conventional, you must be a first-time home
Right.
buyer in order
And
to
again, on
qualify.
all the other down payment assistance programs that are out there, that's one of the requirements. You have to be a first-time home buyer,
Right.
and you have to have
It's
home buyer education. So this one gives you,
And
that additional
a first-time
option.
home buyer can be somebody considered that has owned a home before in the last 3
3
years.
years.
So keep that in mind when you're getting into this.
Right.
There are restrictions on your debt-to-income ratios on these programs. So, we don't know enough yet, but imagine we had one approved this week at 55% debt ratio
I
on an
did.
FHA.
I know.
Don't like to tell people that because you're going to send me your high debt ratio loans.
So let's
But they
repeat
do
that.
apply on
I'm
this.
kidding.
And there are income limits in some areas.
In
so.
some cases.
Yeah, so
Only on
that's
the
a great
commercial
new
side.
program,
Yeah.
too. So let's talk about
love
another
that.
cool new program out.
This is my other favorite new program.
Yeah, so Equity Edge. It's a renovation program. So tell us about that.
So a lot of
DeLynn.
times people will say, do you guys do FHA 203K because this house needs a new roof, or this house needs a new bathroom, or, things like that are going on. Yes, we do 203Ks. 203Ks, for those of you who already know, or for those of you who don't, there's mounds of paperwork. They take probably 60 days to do. The builder has to be approved, contractor. We need resumes. We need dog's name, blood type. You need like everything under the sun to get your contractor approved. And re-inspections constantly. Every time a new nail is put in, they have to send the inspector out again, it seems. So they're definitely, FHA 203Ks are just not an easy loan to do. And people who have done them just totally groan through them, even though I warned them up front. But anyway, so we have this new program, and it's called Equity Edge Renovation Program.
You know what? This is pretty cool because basically if you take a $100,000 purchase price on a house, you're going to be able to get another 15% on top of that for renovation. So if you want to fix the bird cage, you want to fix the pool, you want to update the kitchen,
Right.
whatever you want to do, and they fund the 10% of it to you right at closing.
Right at closing.
Yeah.
Right up front.
And then you get another 120 days to get your project completed.
And we don't have to go through getting the builders approved by HUD
No.
and all this stuff. We don't have to go through all of that paperwork anymore.
I'm-
It can't be sweat equity. It does have to be done by licensed people, because obviously you should be using licensed people anyway. That's
But we don't have to get
state
the
of Florida thing.
builder or the contractor approved in
Right.
this program. You pick them, and we don't care if they have bad credit.
So let's just say, as an example, they want
That
to.
just went over your head.
I know. We
Anyway,
do care
go
if they
ahead.
have bad credits.
No, you don't care if the contractor does.
No, we don't.
Because when you have to get a contractor
That's
approved,
true.
they look at
Yeah, they look
their
at all that
financial
stuff.
data.
The
yeah,
government,
yep.
FHA looks at that. And the other thing with the FHA too is a lot of people don't like the mortgage insurance that's on it, which stays on it, as we
Yes.
know, for the life of the loan. Whereas in a conventional world, even if there's a chance it can go away, especially if you're
And it can-
improving the property right
Sure.
away.
And it can be lower because we can go up to 95% LTV on a conventional and use this program.
Yes.
So a great way, if you're looking to do updates, you want to replace the AC, you want to do
Yeah, so if it
just
needs a
any
new roof, if
updating.
it needs gutters, vinyl siding, pool repairs, it cannot put in a pool, no adding anything. It has to be the footprint of the house that's already there, so you can't put a room addition or anything like that. We're not changing anything structurally.
But you can certainly upgrade what you got.
You can, let's say you got a
imagine
1970s kitchen and, you're going to redo the kitchen. The first thing you do, we can finance that in for you right
Avocado
at purchase.
green. Wasn't that in?
In the 70s.
It's
And
coming
Harvest Gold.
back. Oh, Harvest Gold. And
Harvest,
how about-
which was orange, by
and
the
what-
way.
In the 80s, we did the mauve, remember?
Yes, that was all seafoam green
Yes.
and mauve. I know. Some of those houses, I was just talking to a first-time home buyer couple yesterday, and they're pink. And I said, yeah, we called that mauve.
Yeah. I remember my mom bragging when we got our new house back in the 70s, saying, look at these counters. That's for Micah.
For Micah.
Okay. Whew, now,
know.
now you go, and it crumbles. you know?
Yeah, I know. And that same counter's probably still in some of those houses.
Yeah.
So
yeah.
if you want to buy those houses and upgrade that kitchen,
know.
this might be a perfect program for you to go into.
I know. So that's a great another program. Reach out to us about that. And we can give you more information about it. So, I only want to spend about 30 seconds on this new thing that we have launching
I know.
for our first-time home buyers
Just a
and our
tease.
realtors. This is just a little, it's called the Mortgage Firm Quick Qual. And this is just an amazing app. It's been in development now for 2 years. And we're starting to roll it out. And if you want to be a part of it when we roll it out, reach out to us, because this is an app that, one of the challenges in your industry, and we feel your pain, is you need a pre-qualification over the weekend. And you have buyers that want a pre-qual letter. Well, this app is going to give it to them at their fingertips. And you, as their realtor partner, are going to be able to share the data with them.
And so you don't have to be calling us anymore, on a Saturday night or a Sunday morning or something like that saying, okay, the price changed, I need an updated pre-approval letter or that kind of thing. You're going to be able to make those changes yourself. Basically, we're going to say a payment. Here you go. This is the maximum payment. And we're going to plug that into the app. This is the maximum payment that they can allow. And as long as you can change houses, loan amounts, prices, taxes, HOA fees, you can make all of those changes yourself to match whatever house they've changed their mind and decided to buy this one instead. And you can make those changes on your own.
And when you lose that buyer, per se, to La La Land, and he goes back in the app, we're going to know that they're looking at putting a higher purchase price in. We're going to see all that. Pretty amazing. We'll share more about that. If you want to get involved, again, reach out to us. So, all right, let's talk about community events and our favorite charity.
I know, because we're running out of time.
Yeah, we are out of time. So let's, upcoming dates, we got West Pasco Business Association, our charity of choice right here in the community. Go on WPBA.biz and check them out, but we got some upcoming events. They're the host.
You guys all like coming to these events with us because we see you there.
Taste of Trinity.
Taste of Trinity is
at
March
7th.
7th.
At Seven Springs Middle School. It's a great fundraiser for the
It's a Saturday
school.
afternoon. Bunch
Be
of tents
great.
up. Lots of tasty
11
food.
to 2. Come on in. It's a nominal fee to get in, and you can bring your family and enjoy tastes of some
Lots
great
of people come
local
through.
restaurants.
So it's a good
hundreds
way to
and
rub
hundreds of
elbows
people.
with some good people.
Yeah, so we've got that, and then we've got, of course, our Lunch and Learn is on March 10th
10th.
at Carrabba's right here in Port Richey, and it's going to be a great
Jenny
great
Sieg,
meeting. It's
attorney
gonna be
Jenny Sieg.
It'll be on estate planning and probate,
And
how
what
it
to do
affects
when
your
your
real
seller
estate
dies.
deals. We're always about trying to help you guys grow your business and some of the pitfalls out there. And then April 1st, we got a great new
To be
announcement.
announced.
I'll tell you about it. So like our show, share it, get us out there,
We appreciate you guys watching. We are today and every day.
moving forward. See you next week.
Bye-bye.